Welcome to Drift Shield, where we focus on smart, practical ways to protect your vehicle and your wallet. If you are a young driver or a parent trying to manage high automobile insurance premiums, you know how heavy those monthly payments can feel. Young motorists are statistically classified as higher risk by insurance carriers, which leads to much larger rates compared to older individuals. Fortunately, there are several completely legitimate and approved strategies you can put into practice to significantly lower those numbers. Understanding how insurance rating structures work gives you a major advantage when setting up your policy. Today, we are going to walk through the most reliable, fully compliant methods to lower those rates without compromising your overall coverage. Insurance companies calculate rates based on probability, statistical historical data, and overall risk exposure. Younger drivers lack years of behind-the-wheel experience, which naturally places them in a higher risk tier. However, insurance providers offer specific rating adjustments and discounts for policyholders who actively demonstrate responsible behavior. Knowing which discounts exist allows you to present your household profile in the best possible light. Instead of paying standard high-risk prices, you can structure your policy to reflect safety and dedication. These methods follow every single insurance regulation and industry guideline, ensuring your policy remains completely valid. Taking these proactive steps will save you substantial money over the duration of your policy period. One of the most effective methods to reduce monthly automobile insurance costs for young motorists is the Good Student Discount. Most major insurance providers reward full-time high school and college students who maintain strong academic standings. Typically, maintaining a grade point average of a B average or better makes a young driver eligible for noticeable rate drops. Insurance statistical models demonstrate that students who perform well academically are generally more attentive and responsible behind the wheel. This single discount can lower the young driver portion of your premium by up to 20% depending on your provider. It provides a fantastic incentive for young people to keep their grades high while saving their family money every single month. To secure the Good Student Discount, you must provide official verification directly to your insurance representative. This usually requires submitting a copy of the latest official academic transcript or a report card certified by the educational institution. Some insurance carriers also accept official letters signed by a school administrator or dean confirming honor roll placement. It is important to renew this documentation every semester or academic year to keep the discount active on your policy. Make sure to ask your insurance carrier about specific cutoff thresholds and eligible age limits for academic savings. Staying organized with school records makes maintaining this rate reduction straightforward and simple. Another powerful strategy is enrolling the young driver in a certified defensive driving course. These courses teach essential hazard awareness, safe stopping distances, and advanced techniques to avoid collisions in dangerous conditions. Many state licensing authorities and recognized highway safety organizations accredit specific classroom and online programs. Completing an approved defensive driving class proves to your insurance provider that the driver takes road safety seriously. In return, many carriers offer a mandatory or voluntary percentage discount directly on collision and liability coverages. The cost of taking the safety course is usually recouped within the first few months of lower insurance payments. Formal driver education programs completed during high school or through professional driving schools yield similar financial benefits. These structured courses combine interactive classroom instructions with behind-the-wheel training under professional supervision. Insurance companies value formal instruction because it establishes foundational vehicle control habits early in a driver development. When your teenager finishes a certified driver education program, obtain a formal certificate of completion right away. Submitting this certificate directly to your insurance provider will unlock specialized new driver discounts on your account. Combining a certified driver education course with a good student discount creates immediate layered savings on your regular bill. Enrolling in telematics or usage-based insurance mobile applications offers another transparent path toward lower premiums. These modern mobile applications or small vehicle plug-in devices monitor real-time driving metrics like speed, braking, and time of day. Insurance providers use this transparent data to reward safe drivers with personalized policy discounts. A young driver who avoids sudden stops, adheres to posted speed limits, and avoids late-night travel earns high safety scores. Many insurance providers offer an initial discount just for enrolling in the telematics program from the very start. Over time, consistent safe driving metrics can produce ongoing rate reductions on your overall policy. Using telematics applications also creates a great opportunity for parents and teenagers to review driving performance together. The mobile applications display helpful visual feedback, highlighting areas where driving habits can improve. Seeing specific metrics regarding acceleration and cornering helps young drivers build heightened situational awareness on the road. Safe habits directly protect the vehicle while keeping policy prices as low as possible. Insurance companies appreciate measurable proof of safe driving, making telematics one of the fastest-growing discount options available today. It transforms daily driving into a measurable way to prove low-risk behavior. Assigning the young driver as a secondary operator on an existing family policy is almost always cheaper than buying a separate policy. Independent insurance policies for teenagers carry very high baseline rates due to the lack of prior insurance history. When listing vehicles, assign the young motorist as the primary driver on the vehicle with the lowest insurance rating group. By adding the student to a parent policy, the young driver benefits from the established continuous history of the adult policy holder. Proper assignment ensures complete compliance with insurance policy requirements while keeping total costs manageable. Always disclose all household drivers fully to maintain total policy legitimacy and claim protection. The choice of vehicle assigned to the young driver plays a massive role in setting final insurance premiums. Vehicles with high safety ratings, advanced driver assistance systems, and moderate engine sizes cost significantly less to insure. Practical midsize sedans and small crossover vehicles are ideal choices for new drivers. Insurance providers examine vehicle collision repair costs, theft statistics, and occupant protection features during rating. Selecting a sensible, safe vehicle keeps both collision and comprehensive premium costs grounded. Before buying any automobile for a young family member, call your agent to run a price comparison quote. Avoiding high-performance sports cars, luxury models, and large modified sport utility vehicles is essential if you want low rates. Vehicles with oversized engines or high-performance capabilities carry higher accident statistics among youthful drivers. Insurance carriers price coverage on these vehicles very high to offset potential repair and liability expenses. Older vehicles that feature updated safety equipment like anti-lock brakes and side airbags strike a great balance between affordability and protection. If the vehicle market value is modest, you might also consider adjusting physical damage coverages. Choosing a realistic family automobile ensures your hard-earned discount strategies deliver maximum savings. Multi-vehicle discounts provide another automatic way to lower the overall bill for your entire household. Insurance carriers offer percentage discounts when you insure more than one automobile on the exact same policy. Adding the teen driver automobile alongside parent vehicles lowers the average cost allocated per car. This consolidated approach makes managing billing schedules simpler while maximizing policy-level discounts. Always verify that every eligible vehicle in your household is grouped under the same primary provider. Consolidating your family fleet is one of the easiest ways to offset new driver rate increases. If your young driver is heading off to college, ask your agent about the student away at school discount. Many insurance companies offer reduced rates when a student attends school over 100 miles away without a car. Because the young driver only operates household vehicles during school breaks and holidays, their risk exposure drops significantly. The student remains fully covered when visiting home, yet you avoid paying full-year active driver rates. This option helps maintain continuous insurance coverage history while reflecting actual vehicle usage. Contact your provider with school enrollment details to activate these specialized seasonal savings. Adjusting policy deductibles is a strategic financial tool to lower monthly payments for young drivers. Increasing comprehensive and collision deductibles from a lower amount to a higher amount reduces the carrier risk load. In turn, the insurance company lowers the premium required for physical damage coverage on that automobile. However, you must ensure your family maintains emergency savings to cover the higher deductible if an accident occurs. Balancing deductible choices with monthly budget needs allows you to customize policy costs effectively. Shopping around and requesting quotes from multiple licensed insurance companies is always recommended. Different insurance carriers use unique formulas to calculate risk for youthful drivers, leading to varied price quotes. Working with an independent insurance agent can help you compare multiple legitimate offers quickly. Bundling automobile insurance with homeowner or renter policies provides additional rate relief across all your coverages. The savings earned on a homeowner policy can directly offset the extra cost of adding a young driver. Maintaining continuous, uninterrupted insurance coverage is vital for long-term affordability. Lapses in auto insurance coverage lead to higher baseline rates and reclassified risk categories. Promoting safe driving habits and avoiding traffic violations is the single most sustainable strategy for low rates. Speeding tickets and at-fault accidents trigger major rate increases that can last for years. Encourage young drivers to use mobile phone blocking features while driving to prevent distracted driving entirely. Establishing strict household rules regarding vehicle use reinforces safety lessons learned in defensive driving courses. Schedule an annual policy review with your insurance agent to verify that every eligible discount is applied. As young drivers mature and reach milestone ages, insurance rates decrease naturally. Implementing these approved strategies keeps your family protected while maintaining full regulatory compliance. Every strategy shared today provides a fully compliant and proven way to manage young driver insurance expenses effectively. Applying these legitimate methods allows you to enjoy peace of mind on the road without overpaying. Thanks for watching. Subscribe to this channel, like the video if you found it great, and leave your questions in the comments.